Good day everyone, I am Shaina Bungkawan and today we're going to discuss the commercial banking. So what is commercial banking? A commercial banking refers to financial institutions that provide a wide range of services to individuals, businesses, and governments. So the banks consist of these following types. So commercial banks are for-profit institutions that accept deposits, make loans, safeguard assets, and work with many different types of clients, including the general public and businesses. They only focus on day-to-day banking needs, helping people manage their personal finances and supporting businesses with funding for operations and growth. So the next one is universal banks. It combines the services of both commercial banking and investment banking under one roof, and it provides a wide variety of comprehensive financial services, including those tailored to retail, commercial, and investment services. The next one is thrift banks, also known as savings and loan associations or saving banks, often cater to a community or local area and play an essential role in supporting affordable housing and financial inclusion for lower income groups. Specialized government banks are financial institutions established by the government to focus on specific sectors or areas of the economy that require targeted financial support. So these banks often provide funding, credit facilities, and financial services to promote growth in areas such as agriculture, housing, small businesses, or exports. So the last one is the rural banks. Rural banks are the financial institutions that operate primarily in rural areas, focusing on providing banking services to farmers, small businesses, and rural communities. Rural banks play a vital role in improving financial access for underserved populations, supporting agricultural productivity, and encouraging rural entrepreneurship. They help bridge the gap between urban and rural financial system. The contribution of commercial banks in the development of the economy is very important. They generated the second biggest portion of business undertaken by all types of financial intermediaries. So for instance, the total deposit liabilities attributed to commercial banks as of June 2014 amounted to, for the second quarter of 1999, amounted to 638,292 billion pesos. So the total asset accounts of commercial banks also as of June 2014 was 883,059 billion pesos, while a total loan for portfolio was 417,035 billion pesos. So that's all for today and have a good day.
Good day everyone, this is Jenny Heverola. In this video, the topic that I will discuss is all about commercial bank. So what is a commercial bank? It is a financial institution that offers a wide range of service, including accepting deposits, providing loans, such as business, personal, auto, and mortgage loan. And they also offering investments products like a savings account and certificate of deposit. In essence, commercial banks serve both businesses and individuals by facilitating financial transactions and providing credits to spur economic activity. So in the Philippines, as many as countries, commercial banks play a vital roles in the financial ecosystem by supporting businesses through loans and investment service. So while simultaneously offering basic financial products to individual. So when you say commercial banks are typically owned by a shareholders. So who invest in the banks and receive dividends and returns. So these banks operates with a goal of making a profit which is shared among their investors. While the primary function is to cater to the financial needs of businesses, they also cater to individual customers through services like personal banking, savings account, and other financial products. And also, as a banking practices evolve over time, they precise roles and offering of commercial banks may shift, but their core. So, and this function remains the provision of financial service to both businesses and individuals.
Good day everyone, my name is Elsa Ingenias. My report is all about services offered by a technical commercial bank. For example, RCBC. The products and services offered by RCBC or Regional Commercial Bank Incorporation, which is categorized under deposit investment, remittances, and remittance. RCBC offers deposit products. These are various types of accounts that customers can open to deposit and save their money. Savings accounts. Regular savings account. A standard savings account where you deposit money and earn interest on your balance. E-Woman Savings. Likely a savings account especially designed for women, offering earns or figures that cater to their needs. Dragon Peso Savings. A special savings account denominated in Philippine pesos. Dragon Dollar Savings similar to the Dragon Peso account but denominated in US dollars. Super Earner, a high-yield savings account designed to earn more interest than standard accounts. SSS Pensioner, an account meant for retirees receiving Social Security System pension allowing them to manage their funds easily. Payroll Savings, an account linked to payroll services where employees' salaries are deposited automatically. FCDU Savings, Foreign Currency Deposit Unit Savings account. This account allows individuals or companies to hold deposits in foreign currency like US dollars, euros, or ETC. Checking accounts. Regular checking. A basic checking account for a day-to-day transaction. E-Woman Checking. A checking account tailored for women, positively offering added benefits or flexibility. Super Value Checking. A checking account offering better value perhaps with lower fees or higher withdrawal limits. Credit cards. RCBC Banker at credit card issued by RCBC that follows customer to borrow money up to pre-approved limits and pay it back later, usually with interest. The bankers would offer various perks like cashback, travels, rewards, or discounts. Investment products. These are financial instruments or services designed to help individuals or businesses grow their wealth over time. Treasury and fixed income securities. Treasury bills or T-bills, short-term government securities that can be purchased at a discount and redeemed at a face value upon maturity. Fixed-rate treasury notes or FIXENS, government bonds that pay a fixed interest rate over a set period. Retail Treasury Bond or RTB, government bonds offered to individual investors making them more accessible to the general public. Peso government securities. These are investment in bonds or other debt securities issued by the Philippines government which are denominated in Philippine pesos. Local corporate bonds or PNBP, bonds issued by local corporation, possibly including the Philippine National Police or other entities, offering a fixed return on investment. Foreign currency savers, a savings or investment account that allows individuals to save or invest in foreign currency. Also, the RCBC having trust products and services like personal trust and investment management services, a service where the bank manages an individual's or family wealth and assets including investment, estate planning, and more. Regional Unit Investment Trust Funds, a pool fund managed by RCBC where investors can contribute and share in the profits or loses all the investments. This is a great way for people to diversify their investment without having to manage them directly. Wealth management, comprehensive financial planning and asset management services for high net worth individuals or families. It typically includes services like portfolio, management tax planning, and estate planning. Number 3, prepaid cards. My Wallet, a basic prepaid card that you unload with a certain amount of money and use for purchases. My Wallet Visa, a prepaid card with the additional functionality of being a Visa card, which means it can be used internationally whether a Visa is accepted. Mercury Draw, my wallet card, a co-branded card with Mercury Draw, a major pharmacy chain in the Philippines, lately offering discount or perks of purchasing medicines and other products at Mercury Draw. 4. Remittance. This section refers to the transfer of money offered by workers abroad to their family back home. RCBC Money, an international money transfer service that allows individuals to send money to and from the Philippines. This service is widely used by overseas Filipino workers or OFWs to send money to their families.
Good day everyone, my name is Carl W. Libunao. So the next topic is all about the function of commercial bank. So the first one is creating money. It refers to the process through which commercial banks increase the money supply by issuing loans to businesses and individuals. So businesses needs money to keep producing goods. If a producer or the business owner doesn't have enough funds, they can continue making products. When a commercial bank gives a loan to the producer, the loan provides the money needed to buy materials, pay workers, and keep production going. Without the loan, the business would have to stop because of a lack of money. So how does it work? So the bank issue loan issuance. When a bank grants loan, it creates a digital deposit in the borrower's account, even if no physical cash is exchanged. The next is credit creation, where the banks lend more money than they hold in reserves, expanding the overall money supply. The last is promissory notes. So the bank also issue loans through promissory notes, which are promises from the borrower to repay the loan. These notes can be traded or used to buy goods and services, acting as a form of money creation. In short, by providing loans to businesses and producers, commercial banks create new money that helps fuel economic growth and ensure a steady flow of resources for production and investment. Next is payment mechanism. Is a critical function of commercial banks that allows smooth and secure transactions between buyers and sellers. It provides a safe, efficient, and reliable way for individuals and businesses to transfer money without needing to physically exchange cash. So how does it work? Through payment methods, where the customers can use checks, so a buyer can pay for goods or services using a check. The seller deposits the check into their bank account and the bank processes the payment, transferring money from the buyer's account to the seller's account. Or can use electronic transfer, where the bank allow for online money transfers, ensuring quick and safe payments without needing physical cash. Also can use debit or credit cards, where the banks provide card payment systems where buyers can use their cards to pay directly from their bank accounts. Next is transaction safety, where the banks verify payments, ensuring that the buyer has sufficient funds and protecting both parties from fraud or transaction errors. Therefore, this reduces the risk of carrying large amounts of cash which can be lost or stolen. There are three benefits of the payment mechanism. First is the convenience, where the buyers and sellers do not need to meet in person or carry large sums of money to complete a transaction. The next is speed, where the payments, especially electronic ones, can be processed quickly, even across long distance. The last one is safety, where the banks ensure that payments are legitimate, reducing risk of fraud and theft. So in conclusion, the payment mechanism provided by commercial banks is essential for the functioning of the modern economy. by facilitating secure and efficient money transfers. It enables smooth business operations, promotes trust in financial transactions, and supports economic growth. And that would be all. The other function of commercial bank will be discussed by the next reporter.
Good day, everyone. By the way, I am Kisha McWell, and today I'll going to discuss the other two functions of commercial banks. First, we have the pooling of savings. Pooling of savings refers to the process where individuals or groups combine their savings to create a larger fund, often for collective investment or lending purposes. Pooling of savings involves gathering small amounts of money from multiple individuals or sources into a single, larger fund. This pooled fund can then be used for investments, loans, or projects that may offer greater return or benefits that individual savings would achieve on their own. It's often used in cooperatives, mutual funds, and microfinance, enabling participants to access opportunities and financial services that may be out of reach for individuals acting alone. Additionally, pooling reduces risk by distributing it across many contributors. Also, in here, commercial banks accept savings from customers, and individual savings are pooled to form bigger amount, which are made available to borrowers engaged in production and socially desirable ventures. In pooling of savings, interest is paid on the savings which are safe and easily withdrawable. And with the use of the pooled funds, commercial banks are able to extend loans for the following purposes. First, for business expansion. Second, for the purchase of real estate. And lastly, for the purchase of consumer goods and services. Next function of commercial banks is the extension of credit, which refers to the act of a lender providing a borrower with access to funds or financial resources which the borrower agrees to repay in the future, usually with interest. In extension of credit, it allows individuals, businesses, or organizations to obtain goods, services, or cash without immediate full payment, facilitating economic activity and enabling purchases or investments that might otherwise be delayed. Also, in here, the commercial banks are primary sources of credit. This function enables them to render an important service to society. Because of their lending activities, people are able to obtain a higher standard of living through increased production by the various industries and increased investments in capital. Examples of that are as follows. So when a farmer's capacity to produce is limited, a bank loan will enable him to increase his output. With a loan, he can buy the necessary inputs like seeds, feed, fertilizer, and farm implements. When a sufficient number of farmers are provided with enough funds, they produce food enough for the nation's entire population. When farmers have surplus harvest, the excess could be processed into canned foods by firms that are recipients of loans from commercial banks. And when moving a produce from farm to the market becomes a serious concern, commercial banks can extend loans to transportation firms to increase their capacity. And that's it for me. Thank you.
Hello and good day, everyone. I am Layami Montes, and I will continue our discussion on the functions of commercial banks, focusing on facilities for financing foreign trade and trust services. So, facilities for the financing of foreign trade is a commercial banks that are very useful institutions in the financing of foreign trade. When a local buyer wants to make a purchase from a seller in a foreign country, he has to reckon with various difficulties like the following. So first, acceptability of the buyer's currency. Second, assurance of payment and shipment of goods. And lastly, language barriers. With commercial banks, the above cited difficulties may be eliminated. For example, Miss Teresita Encomienda orders special equipment from Germany for her mat shop in Quezon City. Knowing that the German supplier will only accept Deutschmarks, Miss Encomienda goes to a commercial bank to facilitate payment in the currency required. If the German currency is not available, her bank will make arrangement with another bank to provide the currency. So as the buyer and seller will not meet in person, the simultaneous actions of payment and receipt of the goods become a problem. This is resolved, however, when Ms. Encomienda applies for a commercial letter of credit with her commercial bank. The letter of credit is a written statement of the bank addressed to the supplier, guaranteeing that the bank will accept and pay a draft up to a specified sum if presented to the bank in accordance with the terms of the letter of credit. Thus, if the seller shows a proof to the bank that the goods had already been shipped, he will receive the payment from that bank. This eliminates the problem of assuring payment and shipment of the goods. So by availing of the services of the commercial bank, Ms. Encomienda is relieved of communicating with the German supplier in a foreign language. Next is trust services. It is a commercial banks that also provide trust services to clients. Typical arrangement covered by trust agreements are as follows. So first is the bank acts as the executor of the estate of individuals who have wills. Second, the bank takes the responsibility of investing and managing funds entrusted by clients and distributing the proceeds to them. Third, the bank administers pensions and profit sharing plans of companies. Fourth, the bank acts as trustee in connection with bond issues and as transfer agents and registrar for corporations. Fifth, the bank administers sinking funds of client companies. And lastly, the bank performs other activities associated with the issuance and redemption of stocks and bonds.
The functions of commercial banks is also include safekeeping of valuables and brokerage services. Safekeeping of valuables is the storage of assets or other items of value in a protected area. Individuals with valuable may not have the capability of keeping such valuables safe and secure. Aware of the importance of this need, safekeeping service has become an important functions of commercial banks. Safekeeping is one of the oldest services provided by the commercial banks. The protection of valuables may be classified into two types: safe keep, safe deposit boxes and safekeeping. Deposit boxes is a vault box available to customers on a rental basis. The box is where the owner places securities, deeds, and insurance policies, or personal items that are valuable only to him. A safe deposit box is a secure, locked storage unit located in a bank or other financial institution where individuals can store valuable items like documents, jewelry, or other assets. These boxes offer enhanced protections against theft, loss, and damage compared to home storage. Safekeeping. A safekeeping arrangement with the banks requires the bank to take the custody of the valuables and act as agent for the customer. This function may mean that when a valuable security like bond is placed under the care of the banks, the principal and interest will be collected by the bank upon maturity, and these are deposited to the account of the customers. A safekeeping arrangement with a bank means that the bank takes responsibility for holding and safeguarding the customer's valuables, acting as their agent. In this role, the bank may also manage certain tasks such as collecting interest or principal payments on the securities like bonds when they mature and depositing these funds directly into the customer's account. This service provides added convenience and security for the customer. Brokerage services refer to the various functions and offerings provided by brokerage firms that facilitate the buying and selling of financial securities such as stocks, bonds, options, and mutual funds. These services can be categorized into different types based on the level of assistance provided to investors. It is an activity that performed by brokerage firms to help investors buy and sell financial securities like stock, bonds, and mutual funds. These services range from service offering personalized advice and portfolio management to discount or online brokerages that provide minimal assistance at lower costs, catering to different levels of investor experience and needs.
Good day, everyone. Today I'll be discussing an important topic in the world of banking, which is commercial bank deposits. So, through this presentation, we will gain a better understanding of the terms and importance of deposits in the operations of commercial banks. To start, it's important to recognize that commercial banks need to generate income to sustain themselves. While lending is their primary source of income, deposits serve as the foundation of their lending capabilities. Without sufficient deposits, banks cannot lend effectively, and their overall operations would be compromised. Let's define what we mean by deposits. So, deposits are essentially money placed in a bank or safekeeping or to earn interest, but they are more than that. Deposits represent financial claims held by businesses, households, and even governments. On a bank balance sheet, deposits are actually shown as liabilities because they represent money the bank owes to depositors. Now, why are deposits so important? In fact, they make up around 84% of a commercial bank's liabilities. This shows how reliant banks are on deposits. As of June 2014, the total amount of commercial bank deposits stood at a staggering 638,292 billion pesos, highlighting just how vital deposits are to the financial system. Deposit can take many forms, including the first one is a physical currency like coins and bills. The second one is checks, is a written orders directing a bank to pay a specific amount from the issuer's account. The third one is the items for collection, is a payments or instruments collected from other financial institutions. The fourth one is the proceeds of loans and discounts, is the money left on deposit after loan or discount processing. The fifth one is the traveler's checks. It's a prepaid checks used by travelers in place of cash. The sixth one is the draft. It's an orders to pay money at a future date. The seventh one is the promissory notes. It's a written promises to pay a specified amount. The last one is the money orders. So it's a prepaid paper orders for payment of a specified amount. To wrap up, deposits are the backbone of commercial banks' operations, providing the bank with the necessary capital to offer loans and generate income. By accepting various forms of deposits, banks can continue their essential role in the financial system.
Good afternoon, everyone. I am Divine Ortiz. Today, we will be discussing the various types of deposits. Deposits can be classified in three main ways: by their source, by how they are created, and by the method of withdrawal. Let's discuss this one by one. The first type, we have deposits as to source. Deposits can be categorized based on their source into two main types: the private deposits and public deposits. Private deposits. These are deposits made by private individuals and businesses. For instance, when we deposit our paychecks or profits from our businesses into the bank, these are considered private deposits. Public deposits are deposits made by the government, whether it be from national or local entities. For example, government agencies depositing their funds would fall under under this category. The second type, we have deposits as to the way they are created. In terms of creation, deposits can be classified into two types: the direct primary deposits and derivative secondary deposits. Let us have first the direct or primary deposits. These are deposits received directly from various sources. Let's look at the different examples. First, the households. People deposit their paychecks, savings, or money into checking or money market accounts. Second, the working capital loans. These deposits are made when businesses take loans to cover short-term needs like seasonal peaks in production or financing credit needs. Third, the interim construction financing. Builders often need loans to finance construction projects before securing long-term mortgage loans. These funds are used for hiring workers, renting equipment, and purchasing materials. Fourth one is the security dealer financing. Securities dealers may require short-term loans to finance the purchase of new securities or manage their existing portfolios. Fifth, the receivables financing. Retailers offering installment sales on products like cars or furniture may take out loans to finance these deals. Sixth, the asset-based financing. Businesses can secure loans against short-term assets like accounts receivable and inventory, which are expected to be converted into cash soon. Long-term business loans. Long-term loans are crucial for businesses to finance investments and major projects. They include the term loans. These loans are designed to finance long-term and medium-term business investments, such as purchasing equipment or constructing facilities. Second is the revolving credit line. The credit arrangement where a business customer is allowed to borrow up to a pre-specified limit, repay all or only a portion of the loan, and reborrow as necessary until the credit line expires. This arrangement allows businesses to borrow, repay, and reborrow up to a certain limit as needed. Third is the long-term project loans. These loans used to finance the construction of fixed assets designed to generate income in the future. These loans finance major projects like building infrastructure, which will generate income in the future. Fourth is the loans for acquisitions, or loans to support acquisitions of other firms. These are loans used to finance mergers and acquisitions of business. Businesses may take loans to acquire other firms such as in mergers and acquisitions. Loans to individuals. Individuals oftentimes apply for loans with commercial banks. These loans are granted for purposes of personal consumption. Individuals often take out loans from banks for personal reasons such as buying cars, home appliances, personal computers, or covering tuition fees and medical bills. Next is the miscellaneous loans. Loans that are not included under the above listed classes of loans are referred to as miscellaneous loans. These are loans that don't fit into the standard categories. One example could be a loan taken out to purchase securities. So, in summary, deposits can be classified in different ways based on their source and creation method. This classification helps banks manage and understand the types of funds they handle. That could be all. Thank you for listening.
Good day everyone, I'm Jessamine Artato and today I will discuss the according to security required. As to security required, loans may be classified into two. First is secured and the second one is unsecured. First, a secured loan is one backed by collateral such as inventories, receivables, equipment, or real estate. The purpose of collateral is to reduce the bank's risk of loss in the event that the borrower is unwilling or unable to repay the loan at maturity. So, the primary advantage of secured loans is the reduced risk for lenders. So, the collateral serves as a safety net, ensuring that the lender can recover their funds even if the borrower defaults. So, we also have interest rates. So, typically, secured loans come with the lower interest rates compared to unsecured loans. So this is because the reduced risk for the lender translates to a lower cost of the borrower. So next is unsecured loans. Unsecured loans are those that are not backed by collateral and are granted based on the borrower's integrity. So financial condition, expected income, and past record of repayment. And unsecured loans are granted based on the borrower's financial history and credit worthiness. And also lenders assess factors like income, debt to income ratio, and credit score to determine the borrower's ability to repay the loan. So due to the increased risk involved, unsecured loans often have higher interest rates than secured loans. So, though the common types of unsecured loans include credit cards, personal loans, and student loans. So, credit cards, a revolving line of credit secured only by the borrower's credit worthiness. And also, loans are granted for personal expenses such as debt, consolidation, or vacations. And also loans used to finance education, often with government-backed guarantees. So that's all. I hope you learned something. Thank you.
Loans are cornerstone of banking, helping people and businesses finance various needs. Good afternoon, everyone. I am Via Sahipa. This afternoon, we'll briefly discuss how commercial bank loans are classified, focusing on three key categories, which is its maturity, methods of repayment, and its origin. Loans are categorized based on how long they last, and this is called maturity. Maturity has three aspects. First is short-term loans, which have a repayment method of 1 year or less. These are often used for immediate needs like working capital for businesses or emergency personal expenses. Since they have short repayment method, they usually comes with higher interest rates. Next is medium-term loans, last between 1 and 8 years. They're commonly used for financing things like cars or business equipment. The repayment period makes them more manageable in terms of monthly payments compared to short-term loans. And lastly is long-term loans, which extends beyond 8 years. Mortgages are a great example. Long-term loans have lower monthly payments, but the borrower ends up paying more in total interest over time. Next, loans are classified by how they are repaid. First is lump sum loans or straight loans, which they require the borrower to repay the entire principal at the end of the loan term, with interest possibly paid during the term or at the end. These are typically short-term loans and can be risky for the borrowers who may struggle to gather the full amount at maturity. Second is installment loans. Like mortgages or car loans, they are repaid through regular payments. Each payment includes both principal and interest, making it more predictable and easier to budget, but usually spreading the loan out over a longer period. Finally, loans can be also classified based on their origin. So first, loans can be provided directly by the bank to the borrower. Second, alternatively, banks can purchase loan agreements from dealers such as auto or the appliances dealers. Third, banks may also participate in loans from other banks. This happens when multiple banks come together to fund large loans such as corporate loans. And lastly, banks can acquire loans by buying commercial paper, which is a short-term debt issued by corporation. So that's all. Thank you for listening and have a great day.
Good evening, everyone. Tonight, we will be dealing the organization and structure of commercial bank, which are made in accordance with pertinent laws on banking and the specific requirements of the various financial services. This is Roxanne Gracie Tagab, your presenter for this topic. Every commercial bank, there are certain requirements for them to follow. So commercial bank here in the Philippines are also typically organized as stock corporations. So this means they are structured with a capital stock divided into shares, which can be bought and sold by investors. So there are certain key steps involved in organizing a commercial bank as stock corporation. The first one is incorporation. The bank is registered as a corporation with relevant regulatory authority such as the SEC or the Securities and Exchange Commission in the Philippines. Next one is a bank should have a regulatory compliance. The bank must comply with various regulations and requirements set by banking authorities to ensure financial stability and consumer protection. So, furthermore, they are required to secure a certificate of authority from Monetary Board operations. And once it has been organized, the bank can begin its operations like offering different services like accepting deposit, providing loans, and so on. Third one is what we call the capital stock. The bank issues shares of stock able to raise capital from the investors. And these shares represent ownership in the bank. And additionally, 70% of voting stock shall be entitled to a Filipino citizen, as what you see in the book. If you are a foreign man, therefore, you don't have the right to vote. You are not entitled for a 70% of voting stock. Last one is what we call the BOD. A board of directors is elected by the shareholders and able to oversee the bank's operations and make strategic decisions. And class, I know the incorporation, regulatory compliance, capital stocks are not presented in the book. I already shortened this once and make this flow. So it is different from the book, but the content is still there. Okay, let's move to the second topic, powers granted to commercial banks, which are vested by the law with powers in addition to the general powers. So there are 8. First one, to accept drafts and issue letters of credit. Second one is to discount and negotiate promissory notes, drafts, bills of exchange, and evidences of debt. Third one is to receive deposits, which is commonly for a bank, to buy and sell foreign exchange, gold, silver, and silver bullion. Fifth, to lend money against personal security, or it is against securities consisting of personal property or mortgages on improved real estate and the issued improvements. Six, to acquire readily marketable bond and other debt securities. To invest equities in allied undertakings, for example, like warehousing companies, leasing companies, and etc. Last one is to exercise power of investment house and monetary board. I know all of you know that commercial banks, the only way to profit is by taking up a loan, offering to clients a loan in exchange of the interest. Okay, let's move forward to the number of commercial bank and commercial banking offices here in the Philippines. So the first spot, on the top spot, is we have Almana Islamic Bank Corporation. And as of the moment, there are already 45 commercial banks in the Philippines, and there are also over 7,000 and counting banking offices, commercial bank head offices, and other establishments. So we can infer that tremendously over the years, commercial bank has been increasing.
Good day everyone, I am Blessed Amanda and I'll be tackling the top management setup of a commercial bank. So without further ado, let's define what is it. So the top management setup of a commercial bank in the Philippines refers to the organizational structure and hierarchy of senior executives responsible for the overall direction, strategy, and operations of the bank. So it typically includes chairperson of the board, CEO, chief operating officer, and the like. So to better comprehend the setup of top management of a commercial bank, let's have the top management of Philippine Bank of Communication as an example. First, they have Eric O. Recto, the chairman of the board. So the chairman provides leadership to the board of directors, ensuring that meetings run smoothly and that all members contribute effectively. They also represent the bank in dealings with shareholders and the public, offering strategic oversight but not engaging in day-to-day management. Next, they have Patricia Maytisi, the president and CEO. So the CEO is the highest ranking executive responsible for the overall management and success of the bank. They execute the board strategy and are involved in all aspects of the bank's operations, from financial performance to regulatory compliance. Next, they have Leonardo Bidayao, the vice chairman of the board. So the vice chairman supports the chairman and may assume the responsibilities when they are unavailable. They often hold leadership roles in key committees and initiatives within the bank. Also, they have attorney Michael Lau, their corporate secretary. So the corporate secretary manages the bank's administrative function concerning the board, ensuring compliance with corporate governance rules and maintaining records of the board's decision. They also have John Howard D. Medina, their EVP or Executive Vice President Chief Operating Officer. So the COO oversees the bank's daily operations, ensuring the bank's business runs efficiently. They also have Alan E. Atienza, their EVP or Executive Vice President Head of Treasury Group. So the Head of Treasury is responsible for managing the bank's liquidity, investments, and risk related to financial activities. Also, they have Arlene M. Dato, the SVP or Senior Vice President Head of Finance Group. So the Head of Finance is responsible for the bank's overall financial health, overseeing budgeting, financial reporting, and performance analysis. They also have Eric C. Indita, their SVP or Senior Vice President Retail Banking Segment. So the Head of Retail Banking manages the retail arm of the bank, which includes personal and small businesses accounts. And then they have Dreda Mendoza, their FVP or First Vice President, Head of Trust and Wealth Management. So the Head of Trust and Wealth Management oversees the department that manages high net worth individuals' assets, providing estate planning, trust administration, and investment services. So each of the
List of commercial banks in the Philippines. Top 9 commercial banks with the most number of branches. First is BDO with over 1,474 branches. Founded in 1968, BDO is the largest bank in the Philippines. It's known for its extensive network of branches and ATM nationwide. BDO offers a wide range of financial products and services, from savings account and loans to investing, banking, and insurance. Next is the Metro Bank or Metropolitan Bank and Trust Company with over 1,300 branches, established in 1960. Metro Bank is another major player in the Philippines banking industry. It's known for its focus on retail banking and small and medium-sized enterprises or SMEs. Metro Bank offers a variety of financial products, services, including savings account, loans, credit cards, and investment products. Third is the Land Bank of the Philippines with over 1,200 branches. Land Bank is a government-owned bank established in 1963. It's primarily focused on providing financial services to the agriculture sector and rural communities. Land Bank offers a range of products and services including loans, savings accounts, and insurance. Next is the Bank of the Philippine Island or BPI with over 1,100 branches. Founded in 1851, BPI is one of the oldest banks in the Philippines. It's known for its strong corporate banking and wealth management business. BPI offers a wide range of financial products and services, including savings account, loans, credit cards, and investment products. China Banking Corporation, with over 700 branches, established in 1920, China Bank is one of the most oldest Chinese banks in the Philippines. It's known for its strong retail banking business and focus on serving the Filipino-Chinese community. China Bank offers a variety of financial products and services, including savings account, loans, credit cards, and investment products. Next is the Rizal Commercial Bank Corporation, known as RCBC, with over 600 branches. Founded in 1950, RCBC is a major commercial bank in the Philippines. It's known for its focus on retail banking and SME lending. RCBC offers a variety of financial products and services, including savings account, loans, credit cards, and investment products. Philippine National Bank, with over 600 branches. PNB is a government-owned bank established in 1916. It's one of the largest banks in the Philippines and offers a wide range of financial products and services to both individuals and business. Security Bank Corporation, with over 500 branches, founded in 1965. Security Bank is a major commercial bank in the Philippines. It's known for its focus on retail banking, SME lending, and corporate banking. Security banks offer a variety of financial products and services, including savings account, loans, credit cards, and investment products. And last is the Union Bank of the Philippines, with over 400 branches. Founded in 1980, Union Bank is a major commercial bank in the Philippines. It's known for its focus on digital banking and innovation. Union Bank offers a wide range of financial products and services, including savings account, loans, credit cards, and investment products.